While many commentators are still dissecting the initial 50% move from recent lows, independent market analysis reveals that the initial price expansion may have only been the opening phase of a much larger macro cycle. The foundational framework for this technical outlook relies heavily on Elliott Wave principles and Fibonacci extension levels mapped out on the 4-hour XRP USD chart. According to the technical analyst Dark Defender right here on X, XRP successfully completed Wave 4 at its August lows before launching directly into Wave 5. Now, the initial upward leg of this Wave 5 structure propelled XRP from its trough up to a peak of $1.68. Following that impulse, the asset experienced a minor pullback, bringing price action into a key demand zone established between 1.4445 and 1.5692. Rather than interpreting this retracement as market exhaustion, the structural setup indicates an internal correction within Wave 5. Now, price action is currently compressing inside a consolidation triangle right here above this critical support boundary. When an asset holds above established demand floor during a Y5 structure, it often serves as a reloading zone for institutional liquidity rather than a reversal signal. By utilizing the 261.8% Fibonacci extension tool, Dark Defender identifies $4.11 as the primary upside target for the impending second leg breakout. Now, here's my opinion. I view this consolidation triangle above 1.4445 as a textbook structural pause. When technical wave counts align cleanly with key Fibonacci targets like $4.11, it demonstrates that market participants are respecting defined liquidity zones rather than engaging in purely speculative trading. Now, what macro catalyst ignited the first leg of the rally? Right, to understand where the second leg could lead, we must first examine the specific macroeconomic catalyst that triggered the first 50% expansion. Technical structures rarely move in a vacuum. They require macro liquidity to initiate momentum. Right, so on August 19, the US Treasury made a major economic announcement, revealing plans to more than double its debt buyback operations for long-dated securities. The Treasury increased the operational cap from $2 billion, right here, $2 billion to at least $4 billion across the 10-year to 30-year bond sector. Evaluating these policy decisions, CEO of Custodia Bank Caitlin Long noted on X that the US Treasury was effectively executing a form of yield curve control. The immediate result of this announcement was a decline in long-term bond yields, which pushed downward pressure into the US dollar index. As the dollar weakened, capital rotated rapidly into risk assets across global financial markets. XRP responded instantly, surging 12% on August 19 alone. This momentum was further amplified by a high-profile White House crypto policy summit held on the same day. Together, these macro events expanded XRP's valuation by over 50%, moving it from its previous lows to the peak of $1.68 before entering the current consolidation phase. Now, here's my opinion. The Treasury's bond buyback program served as the primary monetary spark for this entire move. When global liquidity expands due to central fiscal interventions, crypto assets with strong market structures are often the first to absorb that excess capital. Now, is the second leg prepared to outperform the first? While the initial macro spark set the Wave 5 structure in motion, the current market dynamics suggest the secondary leg could dwarfen the initial push. The first leg was largely driven by immediate reaction to macroeconomic policy announcements. In contrast, the second leg represents technical continuation within an active Elliott Wave sequence. Now, as XRP maintains its position above the crucial demand zone between 1.4445 and 1.5692, the consolidation structure acts as a platform for secondary momentum. Dark Defender's analysis stresses that the trajectory toward $4.11 bypasses intermediate resistance levels, treating the 261.8% Fibonacci extension as the primary destination once the consolidation triangle breakouts to the upside. If the broader crypto market continues to benefit from favorable liquidity conditions and sustained institutional interest, the transition from the current reloading phase into the second leg could unfold rapidly. The key factor for traders and analysts to monitor remains the integrity of the underlying support zone during this period of compression. So, in my opinion, I believe the risk to reward dynamic at this stage strongly favors the technical wave camp, holding strong above key support levels while the broader market digests macro shifts indicates underlying strength that could easily carry price toward the $4.11 objective right here. And finally, for our overall conclusion, the convergence of macroeconomic stimulus and technical Elliott Wave structures has created a compelling environment for XRP. The US Treasury's decision to double its debt buyback operations to $4 billion provided the liquidity foundation that fueled an initial 50% surge to $1.68. Now, with price action consolidating above key support between 1.4445 and 1.5692, analysts Dark Defender's technical work points to a Wave 5 continuation targeting the $4.11 Fibonacci extension level. As long as the current demand structure remains intact, the secondary leg of this rally remains the focal point for the asset's broader trajectory. And this finally ends our video. Thank you very much for watching and see you on the next one. Or you might just as well check this next recommended video right here.